in less than 16 hours. I'm your host, Steve Van Metre, and thanks for joining me today. Our lead story today, the biggest market-moving event of the year, begins tomorrow. And that's why every Sunday we look at the technicals, momentum, and machine position in the market to help you better position your investments and maximize your returns. Now let's head over to Goldman, where we picked today's story up, because we need to understand just how the machines are positioned, because they're creating an opportunity when everyone's looking at the wrong direction of where the market's headed. And here we can see from Goldman's CTA Flows over the next week. Look at this. In a flat tape, there's $30 billion to buy. Now keep in mind, this is global equities. That's nothing. But out of that, $17 billion of the S&P 500. So you're already getting an initial picture here that the machines have sold and aggressively sold, maybe too much, too quickly, as you're about to see. But let's take a deeper look, because in an up tape, you're looking at $77 billion to buy. Global equities, that's nothing. But now you're talking $35 billion in the S&P. Now we're talking some decent numbers. Now look at this. In a down tape, and this is really what's helpful here, $4 billion to sell, $2 billion to buy the S&P, suggesting the machines are already tapped out to the downside. And that's what really people are missing here, is when you start to see the machines move to an extreme position on one side of the market, all it takes is a catalyst to drive the tape in the opposite direction. The machines then have to reverse, and you get this kind of momentum, this surge behind prices, and that's what we're seeing the setup here. Over the next month, the flat tape, $32 billion to buy, $17 billion in the S&P 500. But how about this in an up tape? So now you're talking the stocks move higher over the next month, $238 billion. This in global equities, $69 billion in the S&P 500. There's some big numbers there. Down tape, only $65 billion to sell. Now let's look at global CTA positioning. Here you can go back to 2015 and look at this. You're seeing extreme positions to the downside. That means that what we just saw based on Goldman's report is machines have already sold. They've aggressively sold. And at this point, any catalyst to the upside puts them in a position to short cover and start to move the tape higher. And this is critical, because look at this next slide here. What do we see in U.S. equities? We see the same thing. When we go back to 2015, look here, 2016, they were extreme positioning. 2015, 2016, what happened? You had double bottom in the market. How about here, 2019, 2020? Now look, we're seeing that same setup again. Now, broadly speaking, investors are bullish on the market, but the tape has been moving lower. This is giving people a little bit of anxiety, causing some of them to sell, reposition. And you may remember last week, we do have some trades on. We'll look at them. They're all upside down, but not much. And you may remember, I put the stop loss level down fairly deep. Why did I do it? Well, you're about to see here in a moment. Let's look at the systematic positioning of U.S. equities. These includes the CTAs, the risk parity, and the vol control funds together. Not an extreme position, but you can see they're well sold down, looking for a potential reversal here in the market. But here's the big deal. From the buyback desk at Goldman, this is the final week of estimated blackout window. As companies have started to release earnings, we will start to see them enter their open window period. We estimate companies typically enter the open window 1 to 2 days post earnings release. The next open window is estimated to be, that'd be a Monday, 10/23, and that's going to roll all the way through December 8th. And this past week saw volumes that were in line with the 2022 year-to-date volumes on the desk, suggesting that companies are indeed continuing to buy their stock back. So you start to see we're going to get a floor, or a potential floor, under the market here at a time when the machines are at extreme positions. And this is where opportunities form. And let's take a deeper look here. We see the historical cumulative market execution activity. We do see some tapering here, and we'll note that the market, as corporates buy less of their stock back, of course, there's puts a little downward trend on the market. But we're about to get that surge over the next 2 months. This is real critical, because this is the biggest 2 months out of the year. If you look at corporate buybacks, the biggest 2 months are going into the end of the year, and that's why we're going to see a likely market moving event, because you start talking about corporates come in and start buying stock, the machines are deeply in the short position, stock prices rally a bit, and the machines have to short cover, and next thing you know, they're chasing themselves higher into a big monthly buy surge into the year end. And that's the setup we're seeing here. And here we can see historical repurchase activity. We're down a little bit from the peak, but of course, Goldman's notating that we're still going to see what they estimate is a heavy amount of executed buybacks, and that again, putting the biggest amount of any quarter in the fourth quarter here. How about we take a look at TD Securities, over 44.70 to buy, under 4,300 to sell. This is already triggered. It's a little late. We don't have the most current one because they haven't posted it yet. But let's take a look at our screens. We have momentum is negative on the S&P 500. This is only based on one day. We got RSI here now at 35, so almost at oversold territory. And this is really important because, tactical traders are looking for these signals. They want to see these in oversold territory, and they come and buy. So now you look at the setup. You've got near oversold conditions. You've got corporates coming back in to buy, and then 1 to 2 days after earnings are going to turn on those engines. Plus, you have machines in maximum short positions. You see the opportunity here, and the great thing is we help you out with all of that, not just on the show, but our Momentum Timer Pro report. That's just one on the bottom. It aggregates a bunch of technical signals, smooths them all out for you, and tells you what to do. It's got the daily buy signals here on a 1-month window. There's a minimum on the sell side on the 3-month window. Also a sell on the minimum, and on a 6-month window, a buy mid. So what we're seeing is a short-term pullback in the market is what we're seeing in momentum over the last 1 month and 3 months, and that is strong because we do have a buy it open that we put on based on our reports, and we use 2 of them. We've got our Momentum Timer Pro, as you see here, and we needed to see a 1 count on the daily buy signal, which we did back on 1010, and a short covering or move higher on our CTA program. So we have a mimic of those machine positionings, and this is really cool because it gives you an advanced lead. So we now look at the Goldman positioning and says, look, we're fairly extremely short. Our machine positioning does something slightly different. It runs a historical overlay, and that's what's powerful. It's telling us that those machines are overcommitted on their positions. And so the 2 of them together on October 10th, we put a buy it open at 432.94. I'm leaving the stop loss at 410. And you remember last week I said, look, we're getting into the buyback window, strongest 2 months a year. You don't want to be too short on this market, but you need to give some room for the kite to fly. Friday's closing, so we're down a little bit, 421.19. Upside target at 434, just above our opening purchase. Downside target still at the same level as the stop loss. Let's take a look at the chart here and see what's going on, because we got a stop loss down here at 410. Now, why did we put it deeply down here? Because notably, you see support. Let's zoom out to the 1-year chart, or we are on the 1 chart. Let's go to the 2-year chart, and what do we see? Right here around this 415 level, this is where we saw resistance. And so when you break through resistance, resistance becomes support. And I said before, don't be surprised if this comes back down and tags resistance. If it does, that's setting up a potential buying opportunity. Our report flagged it a little early potentially here, but that's why I put the stop loss level down below. So what we're going to expect now is for this to confirm the neckline of this inverse head and shoulder. So here's your left shoulder, head, right shoulder. Here's another left shoulder, another right shoulder. There's your neckline. You confirm the neckline. You have a potential rally setup based not on just the fact that we see the technicals at oversold positioning, but we got these extreme positioning on the machines to the short side, and of course the big push from corporate share buyback. So the opportunity here is very, very interesting. So we're keeping our trade on there for good specific reasons. Let's take a look at the NASDAQ now. QQQ, momentum still negative, near oversold territory. You see RSI at 38. Again, wait till this thing gets oversold. You're going to see the technical traders jump back into this in a big way. MACD's got a negative cross. 1 consecutive daily sales signal on our Momentum Timer Pro. By the way, in case I didn't mention it, Momentum Timer Pro is $20 a month. You can lock that in now, and there are still a few coupons left for the first month free. CTA Timer Pro, $30 a month. The 2 together, you pair them together, it's going to change the way you trade, as you're about to see on a lot of our setups here. They come out with great success. How about this? We have a buy it open on 10/9, 362. Friday's closing down a little bit, but again, we knew that there was a potential chance this was going to pull to the downside. That's why we set our stop loss level well below at 334. Upside target 363. And what do we see on our Momentum Timer Pro? A 1 daily sell, a sell minimum on the 1 month and the 3 month, and that tells us this is a short-term pullback in a broader setup. Here, let's take a look at QQQ, and what do we see? A similar setup here. Let's go back and take a look. Our downside, our stop loss is at 334. So I put that well down under here. Why? Because there's a supply zone. We kind of see there's some buyers and sellers here. We see some big moves. So it would not surprise me if we come right down here to around around 347, 348, maybe a little below. Find some support here. If we do, you'll notice there's some of you that are technical traders that look at the chart patterns. What do you see here? A flagpole. And what do you notice here? This is a bullish flag pattern. So if this completes to the downside here a little bit more and then rallies up and breaks through these short positions, now you've got a catalyst for this thing to get up to its 2-year highs all day long. And of course, technical traders are watching the RSI, looking at that to get back to oversold conditions. So the opportunity in the equity market is big. We know we're down a little bit on our trades, but that is not a major concern given what's coming on Monday. All right, let's take a look at the bond market. We know Metre, max short, TD Securities, max short, they're max short across everything in the bond market. So no more selling from machines. That is done. Let's take a look at our TLT position. Momentum is negative. RSI is at 34, so just coming off oversold territory. MACD is negative cross. 4 consecutive daily sell signals. Now remember, we're going to add on the next time our CTA comes off of this max short position and we get a +1 on our daily count. That's the signal we're looking at. Those are user reports that have the best success. That's what they do. Now remember, we took this trade on initially without a stop loss. So we're trading it now to recover. So we got a cost basis of 100. Friday's closing at 83.24. The downside target 80.51. I'm not saying that that's likely to happen. Upside target 91.06. Let's take a look at TLT here and see what's going on. It's pretty obvious. It's beat up. It's battered. Everybody's short the bond market. Let's zoom into the 6-month window. We saw on Thursday some major selling on the news. The Fed Chair Powell still wants to increase rates a little bit and wanted to see long rates come down. We talked about during our show and on our friend show, Jeff Snyder here recently. Check out his show on the Euro Dollar University channel. So we're looking for a reversal off here. We can see momentum's coming off deeply oversold territory. Just got a negative cross here on the MACD, looking to maybe pull higher. Came off for oversold territory, back near oversold. So we're looking for any kind of rally here to pick up our signals and add another to our position. How about gold? Well, we see buying above 1965. That has triggered. Selling below 1960. Of course, we were all over this with our signals. Here we have it. You notice we did this. We've talked about it. Here we see GLD. Momentum is positive. RSI is maxed out at overbought territory. MACD's got a positive cross. Momentum down below 8 consecutive daily sell signals. Remember, we tagged this on October 12th. Buy it open. What happened? Momentum Timer Bro said it was a +1 on the daily buy count. We had some movement on the CTA program. They're now maxed long on that. We set our initial stop loss, which has been moved up to 177.97. So this puts us in a positive territory if we see a reversal. Friday's closing at 183. So we're looking good. Moving higher to 188 potential is our next look higher. Let's take a look at GLD. So you can see using those two reports together gives you a lot of confidence. Now, it doesn't mean every trade you put in is going to go higher, but it gives you a ton of confidence. Our next move, we're looking up here right around, what do we say, 188.23. That's up here near the recent highs, near that triple top. You've seen these big gap and moves higher. This is a point. If it keeps going up there, either look to sell or put a trailing stop on this thing. We're putting support right here at 178.29 or right around thereabouts is our downside target. But remember, we want to, whenever possible, if you're in the plus, move your stop loss level up to hold on to those gains. How about another one? Gold miners. We pulled this one as well. We have a purchase on October 11th. Buy it open. Look at this. RSI is at 62. This thing's not overbought yet. How about MACD? It's got a positive cross. 9 consecutive daily buy signals. So we said when we see a +1 count on this and a corresponding move on the CTA Timer Bro, that's where you buy. 28.22. Stop loss at 26.94. Friday's closing 29.48. This thing is in the green. Upside target. There's more room for this to run for sure. Now remember, we talked about if it broke that neckline, it was going to collapse, and there was a potential tradable spot here. Turned out it was. Our reports got it. Now we're looking at a move right up here into this, 31.18. It's kind of the early side of this. We're looking at to potentially go a little bit higher than that. But the next step is we got to break through the 200-day moving average. But momentum is positive. So you're going to see this move higher as traders look to take the price of GDX higher. And that is, how you use those two reports together. It is fantastic. Takes a lot of stress off of your trading. Let's take a look at UUP. Momentum is positive on the dollar. You think the thing can't go higher, and yet it continues to. The RSI is cooling off to 59. MACD's got a negative cross. 63 consecutive daily buy signals. Now, let's talk about the dollar here for a moment. Because one thing we've told you and said, look, you can trade this to the downside with UDN. You got to wait for the CTA program to flip, and you've got to wait for Momentum Timer Pro. When that happens, we're going to cover that. So it says here, look to take a reverse. What do we want to see? You see the corresponding move down on CTA Timer Pro. We've got one already. Now what do we need to see? A -1 on Momentum Timer Pro. That would give us our signal to take a reverse position, a short position on the dollar, which we can do by taking a long position on UDN. Friday's closing 29.84. Upside target still at 30.48. Downside at the 50-day moving average. Let's take a look. The dollar here, because this is an interesting setup. And what you can know is consolidating here, potentially forming a top as perhaps people are looking to get out. Maybe one move, final move higher up near the recent highs. We'll see. But otherwise, we'll just wait until the signals confirm. Otherwise, like you note, it crossed that 21-day and confirmed, and now it's confirming potentially it rallies higher or breaks lower. Obviously, we don't know, but we're looking at this from a trading perspective. Momentum is slowing down. Now, keep in mind, price can still rally even if momentum is slowing. That doesn't mean, of course, price is going to immediately turn, but price eventually follows momentum. That is the key to the success of our reports, not only Momentum Timer Pro, but as you see with machine positioning. Let's take a look at our next recovery trade. This in platinum. We added a position on 1020, and what did we tell you we want to see? We want to see both Momentum Timer Pro with a positive signal and a corresponding move on CTA Timer Pro. The CTA Timer Pro came a little later than Momentum, and what do we see? That picked up on 1020, adding position 82.71, bringing our cost basis down to 86.35. Friday's closing at 82.67. Upside target just below our cost basis at 86.03. That's a 100-day moving average. But again, we kind of like this setup a lot because when platinum, you look at it, it gets down here, consolidates. If we zoom out to the 5-year, you see it gets down in this zone, it gets beaten up a bit, and then eventually it surges and takes off higher. So we like this setup. Our reports are telling us to continue to dollar cost average in it. We zoom in here, you can see the sellers are 83.56. A breakthrough that in the 50-day moving average is certainly a bullish setup up to the 100-day here in blue, and beyond that we would be looking to exit the positions. Even if it's just a break even, that would be acceptable. Sometimes that is the way you have to trade. Sometimes you're not all going to be winners. The challenge is most people take their winners or their losers, they sell them by losses, they turn those into more losers. Sometimes you have to learn. If you don't use stop losses right, it's okay. You should use them, and if you don't, then be sure to look for opportunities to dollar cost average, use our tools, and get out of the trade either for a smaller loss, or maybe break even. Sometimes even a small gain. It doesn't matter, but we're showing you how to do that here on the show. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.